the red chart up there.
It's like nothing. It's a nothing.
It's a nothing.
It's a nothing.
It's a nothing.
It's a nothing. It's a hockey stick nothing.
Means nothing. I think you guys...
What you see here is an accelerating problem.
Yeah, cut revenue.
The debt is getting bigger and bigger at the same time that foreign governments and investors in general don't want to fund our debt. So therefore, interest rates will rise. Our interest costs will keep going up.
That's not why interest rates are going up.
Well, if they're going up because the Fed is raising rates because of inflation, but at the same time that's happening, foreign governments are not as interested in having dollar reserves and U.S. treasuries.
Said who? As demonstrated by what?
You look at the foreign reserves of these countries, of these sovereigns, they are much less interested in holding U.S. treasuries. Starting with China and all the BRICS countries. I'd like to talk about the status of U.S. treasuries. So if you look here, this is total foreign treasury holdings as percent of marketable treasury securities. So it's gone down from the mid 50s to the low 30s since 2008, 2009.
As a percentage. So
foreign governments don't want our treasuries as much as they used to, starting with China. They are diversifying into other currencies and gold. And there are a bunch of good reasons for that. By the way, this comes from a blog, which is really interesting. It's a crypto guy named Arthur Hayes. And this is actually a pretty interesting piece called Exit Liquidity. Hayes writes interesting pieces on the banking system and de-dollarization. He's got a little bit of a doomer thesis with respect to the US dollar. Obviously he's pro-Bitcoin. His views are sort of similar to Topology's. But in any event, I think one of the points he makes that's really interesting is that if you're to zoom out 30,000 feet and think about the regime that we had during, let's call it the unipolar moment, where China and the United States were strong trading partners and we had this close relationship with them. The way the global economy worked is that China would sell goods to the United States. They would have huge trade surpluses. And then they would take those dollars and they'd use some of them to buy raw materials like energy. That was called the petrodollar. And then they would take other dollars, their surplus, and instead of repatriating it home, they would have then converted that money into RMB and brought it home. They didn't do that. That actually would have increased the value of their currency, thereby making their export less attractive. This is why they're accused of currency manipulation. They took their surplus dollars and bought U.S. assets, mainly U.S. treasuries. So we had this trading relationship with China that I think everyone understands the physical world side of that trading relationship, where you had U.S. manufacturing jobs got exported to China. They basically made everything. A lot of cheap goods came into the U.S. They had a trade surplus. What I think people don't understand is that a huge part of that trade surplus was used to finance U.S. deficits and debt. And so you had this cozy relationship between U.S. elites, U.S. politicians, and China, where they got to rack up these huge deficits. The government got to spend a lot of money, and China would fund it very cheaply. But now that's all ended. That's stopped because we're basically starting to decouple from China. So China doesn't want to do its business in dollars if they don't have to. Obviously, for the products they sell at the U.S., they'll take dollars. But they're already trying to do as many transactions as they can, buying oil, for example, or energy in RMB. But you want to talk about trends. There is a major trend in the world right now where, again, the BRICS countries, Brazil, Russia, India, China, South Africa, and you can put Saudi Arabia in that bucket, and a lot of other countries, they are looking to diversify off of the dollar. I'm not saying that the dollar is going to stop being the world's reserve currency, because I agree with you that there's no ready replacement at hand. But they are trying to do as many transactions as they can off of the dollar, and they do not want to hold treasuries like they did 10 or 15 years ago. Chinese just negotiated a rapprochement between Saudi Arabia and Iran. Did you notice that?
They
also negotiated. It's not symbolic. What's happening is deeply geopolitical. You've got a couple of things going on. One is that the U.S. has now instituted sanctions on over 40 countries. Moreover, the whole world saw that in the case of Russia, we froze their foreign reserves and basically seized the property of their oligarchs. So if you're an oligarch in the Middle East, you think you want to keep all of your money and all of your reserves in dollars. You understand that the dollar has been weaponized and it's a political instrument in the United States. That's just a fact. So you're going to look to diversify. You're going to look to put your money in gold. You're going to look to put your money in other currencies. Is there, like I said, a currency at hand that's ready to be a replacement for the U.S. dollar? No. And it can't be the yuan. They don't have an open capital account. So who would it be?
Where would you diversify? If you were the CIO, where would you diversify?
Well, what I would do if I were the Secretary of the Treasury of China is I would say that, okay, for the exports to the U.S., we're going to keep getting dollars and we'll do something with those dollars. But for everybody else, we're going to try and do as many transactions in RMB as possible.
But what about the sellers of oil to China? What would they do?
They get RMB.
So you would tell them
those are exactly the trades that we're talking about.
You tell them to hold RMB over US and Euro.
China is seeking to pay Saudi Arabia and Brazil.
If you're the CIO,
you actually don't understand it.
Let me explain. I really understand it. What I'm asking you is, let me ask you a question. Would you, as CIO of Saudi or UAE, would you want to keep RMB? Would you want to keep euros or US dollars? Where would you want to keep your money? And the question is, if they sell that, would they want to keep it in RMB? I don't think they would want to keep the yuan.
Honestly, to answer your question, I wouldn't put it in gold. That's where I would put it. I would. I put it in gold.
Okay.
Here's what China is proposing. Okay. They're saying to Saudi Arabia and Brazil, we're going to pay you for your oil in RMB. And then you are going to take that RMB and you can buy our products
Yeah.
Because again, we make everything. We're the factory of the world.
Yep.
And if you still have a surplus after that, you could settle that surplus in gold because Beijing has a very liquid, gold exchange market. So basically for, over half a century, we had this completely open system where there were no trade blocks in the world. Now we are seeing the rise of trade blocks with multipolarity.
Yes.
The U.S. is pursuing a contradictory policy because on the one hand, hold on, here's the contradiction. On the one hand, we run these massive deficits in debt. So we are a debtor nation who needs to make its debt attractive to debt holders, or our interest rates are going to keep going up. Okay. So that's on the one hand. On the other hand, we are doing things like weaponizing the dollar and weaponizing SWIFT and imposing sanctions and engaging in geopolitical fights that are highly antagonistic to the nations that are our would-be holders of our debt. So one of those two things has got to give. Either we reduce our debt and our deficits and the need. Remember, this is not a stable situation. We continue to issue, somewhere between $1 and $2 trillion a year of new government debt. So we have to constantly find more and more money out in the world to support our debt. At the same time that we're weaponizing the dollar and the financial system so that these sources of global capital don't want to participate.